another trade review. So first of all, I'll show you right now what's the time. So right now the time is 4:47 AM Malaysia time. Today I traded the PM session. Yeah, I slept through the AM session and I woke up and I traded the PM session. What's the reason? Because I was tired during the AM session. Okay, so let's put that aside. And as you can see here, I'm sitting at my trading desk today. So this is how my trading desk looks like. So yes, today is a winning trade. 2 contracts was an 8 handle run. And yeah, today was a very good day. And price offered me my TP targets within 5 minutes. Yep. So this is the PM session, and yeah, so today I'm very happy with the patience. Okay, so at first there was the PM session silver bullet, and PM session starts at 1:30 PM. Okay, you can debate with me all you want, but I am trading ICT stuff. Okay, so the PM session starts at 1:30 PM. So I waited until the PM session. I sat on the charts at 1 PM, and for half an hour I did my analysis, and I just get a feel what the market is doing. So right at 1:30 there was a fair gap forming, and that was the PM session silver bullet. And when price traded into it the first time, and it's literally just reverse away, I was like, shit, I missed it. And I was ready to just let it run without me, because sometimes in trading is just like that. If at the split moment you hesitated, means that trade wasn't meant to be the trade. Well, then later you can see that Nasdaq was unwilling to trade below that sell side, and S&P was rejecting off the same old swing low, and Dow was just literally just going lower, and dollar was just pulling lower at the start. So I was just taking my hands off, just telling myself, okay, wait for dollar to show signs that it want to reverse. Because if you are bearish and dollar is going down, for me, that's because if that means that the market symmetry is not there. And when the market symmetry is not there, it's a very low probability trade. So, and yeah, from the past few trades, I really realized, and I talk about my workout realization, risking only when it's worth. So yeah, I felt like it was not worth. And then later I waited for the right moment, when I feel that okay, right now it's gonna start running. Everything was in symmetry. Dollar wasn't spooling lower. It was just consolidating. It was looking bullish. Dow was just going lower, and Nasdaq was showing signs that it want to go lower. And yep, that is when I placed my limit order. It got filled, and today's trade was literally a 0 drawdown trade. Okay, and within 5 minutes I got my 8 handles, and that's it for the day. Yeah, for the first partial, I used the fulcrum point of the 0.25 negative 0.25 level, which is what ICT teach, the Caleb model. So yep, yeah, so that's about it. Yeah, I'll just show you right now here that I've traded. Maybe today I can do something different, right? Yeah, maybe today I can do something different. I'll try to do a review by showing the screen right here. Okay, so give me a moment. So as you guys can see here, I went short here. Okay, you can see 5519.25. Closer. Okay, I went short here, and I took one partials here and another one here. Okay, so I'll just make the chart a bit bigger. Yeah, so where was my first partial? My first partial was here. So if you measure here until here, you can see you can get that 0.25 negative 0.25 level. Okay, so what is this yellow line? Okay, this yellow line is this daily chart right here. So this yellow line is right here. As you can see, it's the wicks. So yep, there you go. This yellow line comes in at 5512.75. So as you can see here, 5512.75 is this daily C wick. Okay, so 5512.75, this is where I took my first partial off, and then the second partial was a old daily low right here. Okay, so the old daily low is this one right here. Okay, so this was the old daily low. Okay, so as you can see, this trade was literally, I got out close to where it reversed. Okay, yep, so I got out close to where it reversed. Yeah, so as you can see, I got out close to where it reversed. Okay, got out in here. So, and to show you, this is an M live account. There you go, it's a live account. Okay, so what was I seeing? So I was basically seeing this. Okay, so the order flow was bullish, bearish. This is the old swing low. Yeah, as you can see. Yeah, Dow. This is Dow. So this is S&P. The one on top here is S&P. Okay. The one below here is Nasdaq, and the one below here is Dow. So this was the old swing low I was talking about. Okay, it's this swing low right here. So as you can see, S&P went to the old swing low. I just stick the low in. Okay, S&P resisted at the old swing low. Nasdaq didn't even, okay, look at the time right here. Okay, because I started trading at like, this is 1:30, so you must look at the time here. Okay, okay, this. So at this time here, S&P came back up, stopped at this volume balance. Okay, stopped at this volume balance, and then at the same time, you can see Nasdaq literally just say, no, I'm not going down. You can see here, yeah, Nasdaq didn't even touch this old swing low. Dow touched it together, and at this time, it just keeps on running lower. Okay, just keep on running lower. Nasdaq was just meandering around here. Okay, Nasdaq wasn't meandering around here doing nothing. But as you can see, this was the sell side that I was talking about. Okay, Dow, S&P cleared this sell side here, but as you can see, it was rejecting here, rejection. So the next thing I was seeing is at this old swing low, you can see this. Okay, this tree is a consecutive order block. Okay, and if you measure the bodies right here, you will get this level. Okay, this is just the 0.5 standard deviation. I'm just measuring the bodies. Okay, from here to here. Okay, and you can see, actually I'll just, and you can see, I should just do this. If I measure here to here, bodies to bodies, okay, from here to here, these three are order blocks. Okay, so these three are order blocks here. These three candles together is order block, and as you can see, this is the mean of it. So if bearish price shouldn't trade past the mean of the order block. So if you draw this order block, this is the mean. Just put can see that it came up here, stopped at the old swing low, didn't even want to come back here to touch the mean order block. At the same time, if you measure this wick, you can see here is the CE of it, here is the middle of it. Okay, and look at that, bodies respected it beautifully. This is the middle of the wick, respected it beautifully. And if you want more effing beautiful, where am I going to measure? If you measure this wick here, you can see right to the dot with the bodies respecting this swing low here, upper quadrant here. This volume balance is not really important. Okay, and this is on the 1 minute chart, by the way. Actually, you can see here, this is the 1 minute chart. So now, if right now I show you on the 3 minute chart what it looks like. Yep, a little messy right here, but let me scrub right over here. It's right over here. As you can see the time. What's the time? Yeah, roughly here, right? 13:29. So it's this 27 level. So this is that same old swing low. Okay, I'll show you. This is the same old swing low. The same old swing low. Look down. This is the same old swing low. And what you can see here, yep, this is the order block. That's why I say consecutive, because on 1 minute it looks like 3 candles, but on 3 minutes here is 1 candle. So if you measure here to here, it's the same one. Okay, so now as you can see, if I pull it out, you see the mean of the order block wasn't even touched. So what is this saying? This is saying firmness, this is saying strength. And as you can see, this order block, after that we displace lower. So when we displace lower, look at this. This is the 1 minute CV, but right now this is the 3 minute one. If you can see it, it's right here. So I'll make it bigger for you. You can see this small gap right here. This is the 3 minute fair value gap. Okay, so this 5 minute lower Q, okay, where this come from? This come from here. Okay, so on 3 minute we got that, and this is 5 minute. And as you can see on 5 minute, there is no fair value gap at all right here. Okay, so there is no fair value gap at all right here. And where are we at? Okay, must understand, we are trading based on the daily chart. Okay, where are we at? On the daily chart, we are at this spot right here. See 5519.25. Okay, where are we? Okay, we are at roughly here. This is where we are at on the daily chart. Okay, here. So we were at here, right here. 5519.25. This is the upper quadrant of this this is the upper quadrant of the weekly wick. Okay, which is also the daily wick. Okay. Yep, this daily CE wick here, just measure from top to bottom here. So we are at the upper quadrant here. At the same time, we are at this old daily low as well. Okay, as you can see here, this is the daily chart. Okay, daily chart. Okay, this is the daily chart. And as you can see here, we got an old daily low. Okay, so what date is this? So this was really old, 11 September. So this 11 September 2024. Old daily low. Okay, so that's where we are at. Okay, so if you open it up on 5 minute chart, is what looks like here, and you can see this is what ICT teach. Okay, this is what ICT taught. It's called the immediate rebalance. So here we got the immediate rebalance. Here we got the 3 minute CB. So how to get this? I literally just measured. Okay, I just measured the lower quadrant of this wick. If you can see, I pull it out for you. I just measured this immediate balance high, the wicks here. I just measured it. Okay, and you can see here, pops beautifully right here. You see that this is the lower quadrant of this wick, which is a 5 minute immediate rebalance. So, and this is what it looks like on the 1 minute chart. Okay, So this is the 5-minute lower quadrant. Let me take it out first. Okay, others not necessary. And as you can see on 1 minute, there's so many fair value gaps right here. So the next thing that I was seeing was, look at all these back and forth price action. Okay. So basically, right here, look at all this. Chop, 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 chop. And this BC. Yeah, look at that. Perfection. From this BC right here. Can you see it? Here, this fair value gap. Pull it out, and you can see, beautiful. Okay, so and here's showed support, then later it turns into inversion fair value gap. Okay, can you see? Beautifully rejects lower and reach the daily low, my target. Okay, so as you can see, this back and forth price action. So ICT recently taught, he said, when bearish you want to see the upper half of the fair value gap. So if we look at this fair value gap, okay, you must include all the volume balance. Okay, so if you look at this fair value gap, if you just look at the upper half, or just look full at it, what do you see? What I see here was bodies and wicks keep on constantly, and this was just spotty. You can see volume balance here, volume balance here, volume balance here. So I wanted to leave that, and we got displacement at where? At the time 1:30 PM. Okay, remember time then price at 1:30 PM right here. We got displacement. So the reason why I didn't enter short here is because I'm thinking, okay, I want to see if price want to reach up here. Okay, so if you can see, if I pull this out also, this fair value gap here also. Okay, so what happened here was this. I was looking at here, then the second time it came up. Okay, when I was looking at here, I was thinking, oh shit, maybe I missed it. Okay, it came back down, went through this sell side, but then rejection. At the same time, you can see Nasdaq. Yeah, Nasdaq didn't want to clear this same sell side. Okay, are you seeing this? See, at this time where when S&P cleared the sell side, Nasdaq didn't. Nasdaq failed at this time. Then here, S&P cleared the sell side, but look at Nasdaq. Nasdaq was saying, no, I'm not going down yet. So why is it not going down yet? And next, you can see this wick, this swing low here. If you measure this, and just pull out the 0.5 level, okay, you can see it was supporting here. When S&P was rejecting off the same, this is the same swing low, okay, and Dow was just saying, okay, bye bye, I'm gonna just fly lower. Okay, so let's just take Dow out of the picture, because Dow is already saying I am going lower. Okay, so what's next is this. You can see Nasdaq was just holding here. So because Nasdaq was doing this, I felt confident that okay, it might come up one more time, and I was just being patient. And if it runs without me, I'm fine with that also. Okay, so it came up here, and then here rejected here again. So when it rejected here, Nasdaq dig deeper into this CB. Then rejected lower again, stop here as this at the wick again. So this time I say okay, if it comes up the third time, I'm gonna enter. Why? Because here literally form a relative equal high, and retail resistance is right here. So for me, how I see this is okay, buy side is being engineered, sell side is not there, and what I'm aiming for here. Okay, I'm aiming for this old daily CB. Ultimately, my draw was this. Okay, I'll show it to you. This was actually I'll show you. Okay, ultimately my draw was this. Okay, this is a weekly until by PC. So where is it? You go to the weekly chart. So is this right here? Okay, So this is this unfilled portion of the BC. As you can see, this is a very big wiggly BC. So it was this. This is the unfilled portion. Is you can see this purple thing here. Okay, so it's the same thing. So yep, this was what I was looking at, and then, but as you can see, the jaw was here, but doesn't mean it had to come here to be profitable. Okay, I always take at lowest hanging fruit. So the first lowest hanging fruit is this 0.25 fulcrum point level, and also coinciding with the old daily CE wick. And yeah, so as you can see here, displacement really telling me bearish. And if you go to the 5 minute, another thing is, where is it? Okay, it's right here. So another thing is that if you can see right here, we had a displacement and a fair value gap. But if I pull up the wicks right now, if I pull up these wicks right here, you can see. Okay, why did I choose this wick but not this one? Because this one coincides with the fair value gap. Okay, my eyes just go to this wick, and you can see here we found a fair value gap, but the wicks didn't come up and touch this, and we displaced lower somewhat. So this is telling me, okay, you are bearish, very firm. Okay, and if I measure this wick right now, measure this one. Okay, measure right here. Okay, too many stuff. Okay, I measure this. Okay, if I measure here, you can see the blue dots on top here to here. You can see this 5 minute wick also. So you can see it came up, but it failed to touch the wicks. At the same time, it stopped at the swing low here. So this is telling firmness. It's telling me firmness. I want to go down. I want to go down. So that's what made me took this trade. Okay, where is it? Yep. So as you can see here, this is that 5 minute wick. Came up here, stopped there the old swing low at the upper quadrant level, and failed to reach here, displaced lower, balanced price range. So on top right now, I'm seeing all this also, all this right here, to me is also balanced, because you can see the wicks. Here we got one body, then wicks, then we got another body overlapping. So here it's really balanced. So this, I see it as a breakaway gap. So my stop loss was just placed on top here. So as you can see, it was just a very small stop loss. So it was just a 2 handle stop loss. And the first partial was at 5.75 handles, second 8.75 handles, and that's it. As you can see, it coincides with this negative 0.5 level, and so that's it for the trade here. Beautiful trade. Okay, ended here at 1341. First partial 1344, second one 1346. So within 5 minutes, I got my partial. Yeah, so that's it guys. Today is something different. Really walk you through with the trade. So yep, so today is something different. Yeah, but overall how I feel about this trade, after taking this trade, I feel very contented. And yeah, right now I'm in drawdown, so I'm recovering from my drawdown, and that is the priority here. So yep, that's about it, and I'll see you in the next trade review.